Ukraine is experiencing an economic
Ukraine
boom.
leads the Eastern European region in economic growth. Ukrainians can get easy credits
Ukrainian
now.
banks have increased their lending portfolio by 200%.
Imported gas will no longer be cheap.
Inflation is on the rise.
Inflation is on the rise.
Higher spending and higher prices.
Ukraine has been hard hit by the crisis.
GDP falls by 15%, one of the worst in Europe and the world.
Before the crisis, when the US dollar was worth 5 hryvnias, it was rather difficult to find a decent job with a decent pay. Now it is altogether impossible. I think that's the reason why young people depart from this country. Before the crisis, we seem to have lived normally. Once the crisis struck, prices began going up for everything. A year ago, the crisis seemed to have worn off, but the prices continued to grow.
What drove growth prior to the crisis without much reform? Why did the country experience such a deep decline? What are the economy's vulnerabilities? What can drive growth ahead? The answers lie in a combination of factors explored in a new World Bank report entitled Strategic Choices to Accelerate and Sustain Growth in Ukraine.
We developed by inertia due to external demand and capacities available in Ukraine at the time, but no radical economic changes were made. The model of economic growth that has been introduced in Ukraine became ineffective, and the crisis once again revealed our drawbacks, disproportions, and problems. Loans were provided and used on a mass scale for consumer crediting, which formed consumer demand. But domestic resources and capacities failed to meet this demand. In fact, only external producers were credited, and thus we were caught in a double trap.
The banking system did not have strong brakes when it grew very fast before the crisis. And we know that if a car doesn't have strong brakes, it will hit the wall eventually if it drives too fast. And that's exactly what happened. Brakes were few, capital was deficient, risk management was deficient in the banks, lending standards were fairly weak. Everyone jumped on the growth, and the crisis revealed all those vulnerabilities, and the banking system hit the wall.
In the first part of the growth episode, factors of exchange rate correction after the Russian crisis and also utilization of idle capacity in industry played a big role in the economic growth. But then, during the last 5 pre-crisis years, improvement in terms of trade and also the inflow of foreign capital, which was retranslated into credit to the domestic economy, played much bigger role in economic performance. While export drove growth up to 2004, between 2005 and 2008, growth shifted to being consumption-led.
But are the 2000 to 2008 main drivers of growth likely to persist in the same order of magnitude over the medium term?
Looking forward, what's important to understand is that in the next couple of years, those factors that were so significant in the pre-crisis growth are not likely to contribute to growth to the same extent.
The report also states that a number of structural vulnerabilities were either built up and problems were not dealt with during the boom times, which may hamper future growth.
First and foremost, the pension fund is unbalanced. That is due to several reasons. For example, the state undertook certain liabilities without having the proper material basis. An essential part of these liabilities is financed not from the pension fund, but from the budget, which makes it even more difficult.
In 10 years, there will be one pensioner for every single contributor to the system, and this ratio will worsen sharply after that, due to the country's demographic profile. Ukraine has one of the highest shares of pensions in GDP in the world, and very high contribution tax rates that encourage the underreporting of income and the shadow economy. Yet the level of pension received by a large portion of pensioners is low.
Look, my pension was 130 hryvnias, and I could buy 640 loaves of bread for 132 hryvnias. Today, my monthly pension is 850 hryvnias, but I can buy just 230 loaves. Is it better or worse? I think it is much worse.
It is clear that something needs to be done to fix the pension system and make it sustainable for the benefit of current and future pensioners.
In particular, we need to set the limit of the maximum pension, at least for the working pensioners. Also to raise the minimal pensionable service required to receive pensions on the general basis. We have to create incentives for people to work 30-35 years instead of 20-25, maybe even more. Concerning balance of the pay-as-you-go pension system, there is a need to increase the pension age at least for women. There are relevant demographic prospects for this. Life expectancy of women aged 55 is 24 years, of women aged 60, almost 20 years.
Tariff reform is also a key fiscal and service delivery issue. The size of fiscal and quasi-fiscal subsidies in Ukraine is one of the largest in the region, but the quality of service is poor, according to several surveys.
As for increasing natural gas prices for households, it is a mere adjustment, because a breakdown into European countries shows that Ukraine is the only one with such a harsh and large gap between natural gas prices for household and industrial consumers. In all European states, natural gas prices for households by far exceed those for the industry.
The report stresses the lack of public infrastructure investment as a binding constraint to sustained growth in the country.
And these jobs would include improving road, rail, port facilities, airports, etc. All of this type of infrastructure is very important when investors are looking at the country and looking and making a decision and that decision might be a regional decision. Would we like to be in this region? But where are we going to be? Are we going to be in Ukraine? Are we going to be somewhere in Europe, in Poland, in Czech Republic? And a lot of times, a big part of that decision comes down to infrastructure. And unfortunately, at this point right now, Ukraine is lacking in their ability to deliver solid Western standard infrastructure.
The biggest issue in Ukraine are the roads. We have spoonable yogurt that after spending 8 hours on the road from Kherson to Odessa becomes a drinkable yogurt. So the infrastructure of the roads, especially in winter, really creates a huge problem for our business.
At the same time, tax rates are high. There is a lot of administrative pressure on business, and VAT refunds are paid with delays. Yaroslav has been a business owner over the last 15 years, one of the many entrepreneurs struggling to grow in a cumbersome business environment.
For instance, once I delayed payment to the pension fund for 1 day, and it cost me 27,000 hryvnias. At the same time, the government doesn't repay me VAT, and it couldn't care less about it. But how can I pay salaries to my workers if I don't have current assets?
Some of the obstacles include excessive taxes. For example, the payroll tax in Ukraine is one of the highest in the world.
The state must promise and fulfill the tax reduction liabilities, which will produce positive effect. If the state fails to do this, business will go into the shadow again.
How does all this add up?
To finance pensions and wage increases and underpriced utilities, the budget has relied on growing structural deficits, high rates on direct taxes that encourage the shadow economy, and reduced spending on public infrastructure that is badly needed to support private sector growth. This is not a sustainable model for the economy, and it's not a sustainable model for the citizens that see their purchasing power eroded by inflation.
Ukraine is doing badly on business climate ranking compared to other countries.
Taxes, taxes and more taxes. The government is planning to add another tax on the already burdened businessman.
This is just impossible. I cannot pay so much.
Yesterday I had an inspection. I had to ground all work till the evening.
Ukraine is losing its place on the market due to limited export diversification.
Ukraine typically ranks low in cross-country business climate rankings. The report stresses that business entry will be critical to accelerate growth. So what are the obstacles to start a business in Ukraine?
Part of the problem is that in Ukraine it's not very easy to establish a new business. There are too many constraints, too many regulations. The cost of establishing a new business is very high in terms of time. It takes much longer to establish a new business in Ukraine than almost in any other country in the region. And all this is just limiting the number of firms that are prepared to operate in Ukraine.
Yes, I tried to become a businessman, for which I spent about 2 months. You have to get a heap of permits from the fire department, from the sanitary and epidemiological service to become a businessman. It simply meant running from one office to another, hunting after some 100 signatures, getting all sorts of certificates nobody knew where they could be obtained and to whom they should be submitted. That was the problem. You have an idea, you have the wish, but it proves that you are simply denied the opportunity to get things done.
But once you finally open a business, are the costs of operating a business in Ukraine high? What are the major problems facing the private sector?
Running around offices, handing out bribes without which nothing can be achieved. Each bribe induced officials to invent a reason to make you come to them again and again. After a certain time, you are always visited by inspections, firemen, and the like. So you might have a wish and a will, but always someone will put a spoke in your wheel. You can't find a job with a decent pay, you cannot set up your own business. The problems are the same as they were: failure of the government to repay VAT, a rather complicated procedure for obtaining permits, and poor infrastructure. Our authorities want to control every step of entrepreneurs, which is impossible to do.
High price markups, often poor service, limited FDI seem to highlight the problem of lack of competition in Ukraine.
There is not enough competition across sectors because of the fact that there are not enough firms operating in any single sector. There is a lot of oligopolistic, monopolistic competition in the country.
This week we tried to buy a computer, a very simple desktop. If I go to a store in Europe, it takes me 10 minutes. Here it takes 2 days. So competition or lack of competition means that services are not good enough. And obviously they are not.
Some necessary ingredients to modernize and diversify the economy are foreign direct investment, technology adoption, and innovation.
One of the priorities of the government's economic program would be to diversify exports and production. Today, almost 50% of Ukrainia's exports are concentrated in metals and chemicals. It will have to diversify, it will have to move into value-added products. The experience in many countries shows that the best way to bring and adapt innovation and technology is through foreign direct investments. You could adapt this technology into Ukraine. So the same factors that discourage foreign direct investments also discourage innovation and technology.
Well, what we hear from a lot of investors that are looking at entering the market here in Ukraine is that it's the amount of red tape and bureaucracy that's involved in starting a business and subsequently closing a business is very onerous.
We need big investments in order to design and produce new products, but investors are reluctant to finance such projects. The main reason is institutional factors and lack of intellectual property rights protection. The whole system of applied science financing needs to be reformed.
There seem to be cross-linkages between the investment climate and the prospects for modernization and diversification of the economy.
Ukraine seems to be trapped in a vicious circle of high entry barriers and high cost of operation that lead to low competition and limited incentives for technology adoption. This also leads to low export diversification and sophistication, and this in turn leads to vulnerability to commodity prices. This is a self-perpetuating low equilibrium that hampers the structural transformation of the country's economy and cripples aspirations of achieving higher per capita income levels.
It also seems that reforms related to fiscal policy and the investment climate cannot be fully tackled without deep public sector reforms.
The problem is that the public sector still retains many of the features of a command economy. There is an excessive number of agencies, with many agencies responsible for one single function.
Corruption as a number one issue for every business. Then secondly, they talk about inefficiencies in the court system, and which leads to the impossibility to protect their rights in a lawful manner.
Every piece of red tape has somewhere someone that's benefiting from it. And I think that the job is so big that even a reduction of 5, 10, 15%, you really don't feel it. What we need here is something quite dramatic, quite radical.
Growth will have to come from higher productivity, and this in turn will require Ukraine to embrace fiscal and structural reforms that were delayed over the last decade.
The objective of the reform should be to make the state smaller, leaner, but more efficient as well, so that it creates the space for business to invest and to innovate on the basis of the pressures of competition, rather than on the basis of state connections, of who you know.
The World Bank report argues for 3 key priority reform areas. First, fiscal reforms to attract back investors and pay adequately VAT refunds to support the export sector in the short term, and deeper reforms to create fiscal space for public infrastructure that supports private sector growth and improves service delivery to the citizens over the medium term. Second, investment climate reforms to lift barriers to entry and exit of business, improve competition, and foster export diversification and sophistication. And third, public sector reforms to radically change the way the public sector interacts with business and citizens by improving the judicial system, reducing the red tape and the bloated public employment and regulatory agencies, and reducing abuse and corruption. The World Bank report also argues that in the short term, banking sector rehabilitation and the strengthening of regulation, supervision, and transparency are key to attract resources and resume intermediation to the real sector.
The 3 reform areas are closely interrelated. Without fiscal consolidation, private investors will wait and see, because they're not sure about the level of interest rates, they're not sure whether they will get VAT refunds, they're not sure about macroeconomic stability. And on the other hand, without investors coming in, investing money, the economy starting to grow again, tax revenues will be lower and the task of fiscal consolidation will be more complicated. But in the end, what really is needed is a deep reform of the state, a change in the relationship between the state and business and between the state and citizens, so that citizens and business can trust the state to be a fair enforcer of rules rather than dominated by state capture. And that will require a reduction in regulatory agencies, a reduction in red tape and bureaucracy. That's difficult, but it's absolutely essential for the reforms to succeed.
And I'm convinced that everything will be all right, that sooner or later people will understand that they can live no worse than a European or American. I think that everything will be all right. We are simply losing time. Of course, it will take from about 20 to 40 years, but all this can be done in 5.
Following the crisis and in a more difficult global economic context, Ukraine finds itself today at a crossroads. The upside potential of this country is enormous if the right measures are taken. So in the end, the decisions that Ukraine's leaders take today and over the next 3 years could make the difference between slow, volatile growth and a scenario of rapid modernization, turning Ukraine into a true economic powerhouse in Eastern Europe.